I'm going to show you how to buy stock on Etrade. So the first step is you need to find the company, and you go to this box that says symbol. And if you don't know the ticker symbol, you could just type in the name of the company. And I'm going to look for Ford. And it gives you a list of companies that have the word Ford in it. And find the one you want. It's right here. The ticker is F. So if I just typed in F, it would have worked as well. And right here it says buy. You could either buy or sell. You can only sell if you have the stock. So I'm going to buy. And then it brings up Ford automatically. And it says buy, sell, sell short, buy to cover. You might only have these two options, buy, sell. So I'm going to buy. If you want to buy one share, you could just enter the quantity right there, 1. Or if you want to buy 2 shares, enter 2. But if you have a dollar amount you want to spend, you're not sure how many shares you can buy. So if I want to spend $10,000, so I type in 10, 1, 2, 3, and it says 1,663.89 shares. You have to round it down because you can't buy fractionals on Etrade. So 1663, so I'll put that in the quantity, 1663. And then you want to select a type of order, whether it's market, market on close, limit. Let's just do market for now. And that means I'm going to buy the stock whatever the price is currently trading at in the market. Now I can hit preview. This won't actually do anything. I'm just going to go to the next screen to just make sure I entered everything correctly. And you always want to double check. Make sure you're using the right account if you have multiple accounts. And make sure it's a buy order and the number of shares is correct, the company's correct, the type of trade, I'm doing a market order, and it's good for the day. And this is the cost to me. So it's over $10,000 because the stock price might have went up between the time I started the order until now. If I made a mistake, if I meant to enter a different number of shares, or if I meant to do a limit order, I could just change the order. And I'm going to bring it down to 1662. I meant to do that, and now I'm going to hit preview, and I look at my order, make sure it looks correct, and you could even cancel the order if you didn't want to do it altogether. Just say cancel. But once I hit place order, it will execute. Somebody will sell their shares to me at the market price within a split second. So I'm going to hit place order, and the order went through. Now I can look at my portfolio. And you can see Ford is in your portfolio automatically. You don't have to wait 10 minutes or even 10 seconds. It comes automatically because it's all electronic. Etrade goes out in the market. They find someone that's willing to sell the stock to me, and then I pay them, and everything's done through Etrade. Click this. If you click this arrow right here, it shows you your tax lots. There was one person who was willing to sell me all the shares at the market price. That's not always the case. If I go above and I look at Albertsons, I bought 629 shares, and there wasn't one person that was willing to sell me all those shares. There was many people. One person sold me at $15.83, 100 shares. Another person sold me 100 shares at $15.83.99. So regardless of how many shares you have, Etrade will find whether it's one person or 100 people to sell you those shares. So we didn't even need to know anything about the company. We didn't even need to know what Ford does. We could just buy the stock and hope it goes up. But if you want to do more research, let's do that. You can go back up here and hit the F, or you can click down here on this link, F, and you could find more information about Ford. If you wanted to do more research, if that made you feel better before buying a stock, you like to learn about the company and about the financials. Some people just listen to what others say and they buy the stock. Other people do research. Some people do both. And you get tons of research on any brokerage platform. Etrade, you start off with this snapshot. It shows you the open price, what the stock opened for today, and what it closed at on Friday. So it happened to be the same amount, which is not always the case. The volume, this is the volume today, 32.5 million shares were traded today. And the average volume over 10 days, over the past 10 days, 90 million shares were traded in the market each day on average. The market cap is the value of the company according to the stock market. That's 23.9 billion. The range of today is between $5.81 and $6.07. The 52-week range is between $4 and $10.56. So the last 52 weeks you could have gotten it as low as $4. Shares outstanding, there's 3.9 billion shares in the market. The beta, that's a volatility of the stock, how much the price of the stock moves relative to the market. So if the market goes up 1%, this stock should go up 1.1%. So they have a 0 PE because they have negative earnings. And EPS is earnings per share. That's how much money you earn per share of stock you own. So if you own one share for stock, you lose 75 cents in earnings. Earnings are the net income. We could also look at the charts. This shows you the historical stock price, and you could break it down by month, and you could go back many years. You could also look at the trading volume for each day, how many shares of stock sold that day. We could look at the news to read news reports about Ford. We could do options trading. If we wanted to trade leverage, we can buy options. You can look at the analyst research. These are what analysts or bankers say about the company, and this is their predictions. Fundamentals, if you wanted to dig into the financials a little bit, you can see the shares outstanding, 3.9 billion. Institutional ownership, 51%. That's what's owned by institutions like banks and hedge funds, large entities like that. So about half the stock is owned by institutions. Floating shares. These are shares that are available to the public. So all the shares are available. Short interest as percent of float is the percentage of shares that are shorted in the market. So roughly 3% of the shares are shorted, which means people bet against the company. So when the price of stock goes down, people who shorted the stock make money. So even when a stock goes down, you can make money if you bet against the stock. Most people just buy the stock, which is what we did, hoping the price goes up. But we can buy puts, hoping the stock goes down, or we could sell the stock short, which maybe I'll do in another video and show you how that works. Price to earnings is nothing because they don't have any earnings. Price of sales is price of stock over sales per share. That's a really low number, which is a good indicator you want a low number. Price to book of 0.82, that's a really good price to book. That's price of stock over book value per share. Book value is balance sheet. So that's total assets minus total liabilities. So you want to look at the balance sheet. Maybe their assets are crap. That's why they have a really low book value. But it's mainly because their price of stock has come down so much. Price to cash flow, that's price of stock over cash flow per share. That's 13 times. They have a negative return on assets because they have negative income. Return on assets is income over assets. And return on equity is income over equity. That's negative. Return on invested capital is income over total capital. Total capital is equity and debt. Quick ratio is a more aggressive type of current ratio. It's cash, marketable securities, and accounts receivable over current liabilities. So it just takes out the inventory. Current ratio includes the inventory. That's current assets over current liabilities. And these numbers look pretty good. They're over 1, so they can cover their current liabilities. Debt over equity of 5.64. That means they have 5.5 times as much debt as they have equity. Debt over assets of 0.63. That's total debt over total assets. They have gross margin of 6.25%. Gross margin is revenue minus cost of goods sold over revenue. So for every $100 in revenue, they have $6.25 left over to pay for a lot of other costs. That's why it's losing money. Next is operating margin, which is negative 1.5%. That's operating earnings over revenues. And this includes variable costs like wages and raw materials, but it doesn't include interest payments and taxes. And you can see after operating their business, they're losing money. So they don't have much money left over to pay its debts, and it's not going to probably have any taxes because it's losing money. EBITDA is earnings before interest, taxes, depreciation, amortization. That's 6.42%. Net profit margin is kind of like the bottom line, your net income over your revenue. and they're negative 2%. So every $100 they generate, they lose $2. Earnings per share, that's how much money you make if you own a share of stock. You actually have to pay the company 76 cents. You don't pay them anything, but theoretically you do. Next is asset turnover of 0.57. That's sales over average assets. And the higher the number, the more efficient a company is at generating revenue from its assets. Inventory turnover of 11.88%. That's sales over average inventory. That's how many times a company sold and replaced its inventory over a certain period. Receivables turnover. This is net credit sales over average accounts receivables. Net credit sales is revenue generated from sales on credit minus returns. So even if you bash a company like Ford for not running a successful business, they are employing 190,000 people. That's a ton of people, and those people are all paying taxes and are all spending money in their communities. They're headquartered in Dearborn, Michigan. They have a phone number here. So if you're an investor, you own part of the company, so you should give them a call if you have any questions. There's a fax number, who uses faxes anymore, and there's a website as well. And you could look at the balance sheet if you want to get more granular, look at their assets, liabilities, and equity. You could also look on the income statement if you want to look at their revenues or their expenses. You could also look at the cash flow statement. The first section is cash from operating activities, and that starts with net income and it breaks it down. Next is cash from investing activities. This is when a company invests in its company, when it buys machinery or equipment or buildings. Third and last section of the cash flow statement is cash from financing activities, which talks about dividends and debt. SEC filings, so you could find all the 10Ks, 10Qs, 8Ks, all those great documents in here. We go to earnings section and it gives you a prediction of future earnings. We could look at the PE trends of the past and the future. We could look at analyst trends, what the analysts project the company to look like. We could look at revenue in the past and the future. We could look at cash flow in the past and future as well. Next is insider activity, and it's not as devious as it sounds. It's just how much shares insiders in a company buy and sell. Insiders are generally like the executive, like the CEO, the CFO, and if they buy a lot of stock, that may be an indication you should buy the stock, or it could be an indication they want to trick you into buying the stock. And if the CEO sells a lot of stock, that could be an indication you should sell your Ford stock. It may be going down in price, or it could be an indication the CEO needs some money for another yacht. We can look at historical quotes, which is just the historical stock price, and you can look at it by day to see if you want some more information on a particular day. So as you can see, you can do tons of research on a company. You don't have to just buy a stock from hearing other people talk about it. You can educate yourself, and no one can really predict the stock market, but it's still fun to look at and learn about. So please leave a comment. Let me know if you have more questions or if there's other videos you want me to do. Thanks for watching.